Okay, who's with me? Liz McDonald is here, so is Ashley. John Layfield over there in Bermuda, I believe. Yeah, I see the beach in the background. And Scott Martin's with us, I think in Chicago. All right, I want to start with this race to $1 trillion. That matters to a lot of people. John, who hits it first, Apple or Amazon?
I think it's easier to predict who's the biggest company in 5 years. I think that's going to be Amazon. But to answer your question, I think Amazon hits it first. Amazon is up 57% this year. It's a momentum play. But you look at forward earnings, Amazon's at 91. Apple is at just under 15. I think Apple is the better value here, right here. But I think momentum probably takes Amazon to $1 trillion first.
What do you say, Scott Martin?
I say Apple. Just based on the numbers, it's got a head start. It's about 50 billion closer. So to me, that means that there's going to be probably an easier shot to $1 trillion. But here's the thing, too. John's right. You know, if you're looking for growth, you go to Amazon. If you're looking for value, you go to Apple. I bet you both of these companies will be trillion-dollar companies by the end of the year.
That's a good point. Yeah. Lizzie, what do you got?
I think I love John. I think Scott's right. Apple, it will hit it first because of the buybacks and its services, its cash pile. Amazon's facing fierce competition in the cloud space from Microsoft. Apple only needs about $15 to hit it there. I think Amazon needs about another $200 in appreciation to get there.
I mean, the point is
both are amazing
both of them
companies.
will eventually.
And to Scott's point, both of them will probably reach that mark by the end of the year. Why not? They continue to grow and spread out as does Amazon. And Lizzie's right about Apple. Those buybacks are immense.
You know, when you look at the FAMs, meaning Microsoft and Netflix in there, they're worth more than $4 trillion right now combined in market value. That's bigger than the UK stock market. They're approaching the size of the Japanese stock market. So you got to watch the valuations here at this level.
That is extraordinary.
Like all combined in their valuations.
A couple of companies.
Yeah.
That's it. Stay on technology. Old tech. Let's talk about that. IBM, Dow stock, doing well because it's getting into new businesses, artificial intelligence and the cloud. This is one of the oldest names in tech, figuring out how to get into the new line of business. The stock is up a solid $4, 3%. Scott, would you buy IBM at 148?
I'll tell you, Stuart, they've turned this baby around.
Yeah.
I mean, this was a company that couldn't make money to save its life for, gosh, 6, 7, 8 years in the mid-teens here. And then now, you know, coming to the end of the decade, it's starting to really cook. So there's a couple things I like. You mentioned the AI, you know, a lot of new stuff with the cloud that they're doing. Plus, gross margin outlook looks really good. So to me, I think this is a buy.
Next case is Facebook. Their chief, Mark Zuckerberg, is criticized for his comments about Holocaust deniers. Okay, let's step away from that argument for a moment and ask you, John, do these controversies have any effect on the stock whatsoever?
No, because I think people understand that, look, Facebook can fix a lot of things. They can't fix stupid. And you have on Facebook right now, you have the Flat Earth Society, you have a Bigfoot believer page. And if you're getting your news from the same people who tell you scientifically that the Earth is flat and you don't test it at all for truth, you're an idiot. And I think people understand that. Facebook is doing everything they can. I think they will fix this. This is a slippery, slippery slope to try to figure out what is hate speech and what is free speech. But I think Facebook will do it.
Firstly, Bigfoot exists, John. I'm sorry, but that's the news there. Also,
I talked to him last night.
He's my neighbor.
But also, it's not just Facebook. All of these big tech companies have had negative news. Look at Google. We found out recently that they were reading through all your Gmail, which is outrageous, and then passing it on to third parties. Yet the stock continues to hang.
Nothing happens.
I think what hits Facebook harder is and this is an issue, let me get to that in a second, is people are spending less time in it because they see everybody else having a fun time and they're not. So that's the issue for Facebook. But when he said, I don't think they're intentionally getting it wrong, meaning the Holocaust deniers, wait a second, that's bad, that's wrong, because you should be about the truth. If you're saying you're a social media company, you're a publishing company, you got to get it right on your site. You shouldn't have InfoWars on there, conspiracy theories about school shootings. It should be about the truth.
But it's not going to hurt the stock.
But look at that. Yeah, exactly, Ash. I mean, the thing opened lower. Now it's higher, $209 a share.
Yeah.
We brought you this a moment ago. President Trump's latest tweet. Here it is. I told you so. The European Union just slapped a $5 billion fine on one of our great companies, Google. They truly have taken advantage of us. Is that us or the U.S.? I'm not quite sure what the president means there. The U.S., the United States. But not for long.
Yeah, the European bureaucracy is about keeping and flattening the status quo out across the EU. There was a great Financial Times column a couple of years ago. The top 8 tech companies in Europe are worth about a 10% of a Facebook or an 8% of a Google. So, you know, the EU, where is their Google, where is their Facebook? That is the never-ending. The venture capital crowd won't go into EU.
The question is, they probably do violate some of these rules, or certainly by European standards, who've just got GDPR in place, their privacy laws, which are very, very strict, may end up coming here, by the way. But, yeah, you know, it's a drop in the bucket for these companies.
The thing is, the market fixes these problems. Remember Microsoft and Internet Explorer, and then that went away, and Netscape was that fight. That was bought by AOL. I don't know the EU stepping in here is the right place.
But I don't know about a drop in the bucket, though. Well, $5 billion is 40% of their net profit last year.
But don't they make that every, they make $1 billion every 16 days or something?
They have a $100 billion cash pile.
Yeah. Thank you, Liz. Look at the stock. $1,213 a share.
Yeah.
It's worth $833 billion.
There you go.
Pinprick. You got it. Check the big board. Yes, we have come back a little. Now we're down 60 points, 25,135. We have Comcast. This morning says, not going to pursue its bid to buy assets of Fox business parent, that's 21st Century Fox, choosing instead to focus on its offer for Britain's Sky. The market likes that. Comcast is up 2.5%. Alcoa used to be known as the Aluminum Company of America. It cut its forecast. It says tariffs on imported aluminum and rising energy costs have hurt its future. Whoa, that's a big company, and down 5.5%. Look at American Express. Revenue fell short, down 2.8%. eBay gave a weak forecast. Don't do that. Down 8%. Don't do it unless you have to. The stock's down 8%. Profit at Travelers, that is a Dow stock, falling short, hit by losses from those big storms in several regions of the country. That stock is down 2%. So if you look at all these Dow stocks that are falling, that accounts for the 50 points and more of the Dow's loss. Marlboro cigarette maker Philip Morris didn't give a rosy forecast. We are smoking less these days, and that stock is, look at that, Philip Morris down 6%. The Federal Reserve says economic growth holding up, even as trade concerns spread. All right, Scott Martin, will growth counter, economic growth, will it counter any negative effects from tariffs?
It will, Stuart. And the nice thing about what the Fed's doing here is they're being a little bit more dovish, I think, than a lot of us expected at this point. Yes, we're probably going to see 2 more rate hikes this year, I believe, but they've left the door open to maybe be a little bit softer on rate hikes, say, next year if these trade wars heat up, if we do get a slowdown in data because of some tariffs that kick in here. So I think you got the Fed now really watching the market, really supporting interest rates here, and that's why I think the market itself, when it looks at the Fed, is pretty comfortable.
But tariffs so far have not impeded the growth of the United States economy. I think they can draw that conclusion.
No, but the threat may have dampened it a little bit. If that goes away, then only a little, but take that away, and then it really is off to the races.
I'm waiting for July the 25th when the Europeans come to America, supposedly with a trade deal in hand for President Trump. That could be a real big deal, especially if they've got a deal. Attention satellite radio listeners, that would include me. Netflix creating a comedy radio channel with Sirius XM. Well, look, that's a kind of an easy move, I would have thought, because Netflix has got a ton of on-the-shelf content that they can just put into a new channel on the radio.
Yeah, they paid Chris Rock got $40 million from Netflix for just 2 shows. I mean, they
Is that true?
Yeah, and so you could see the long-haul truck drivers enjoying this serious comedy channel.
That reminds me of our report just the other day where Judge Judy last year earned $140 million. Before we go,
and rightfully so.
John, first to you. Judge Judy makes $140 million a year. Do you want to switch careers?
Yeah, I think Judge Napolitano should make $1 billion then. I actually like him a lot better.
Did you mean the judge?
Yes, I do want to switch careers. You know, they also got Chappelle and Amy Schumer. They're making a huge bet on comedy, and I think it's a natural progression to go into Sirius with this partnership.
I mean, I just find that incredible. $140 million. And I think Scott Martin and John, you're both the same. Amazing amounts of money. Thanks for joining us, gentlemen. We're in good shape.